order filled.
Alright, what is good everyone? Welcome to this video where I'm going to break down my 30-minute Po3 trade that I taken yesterday, June 9th, 2025. And pretty much, I just want to break it down in depth. I recorded the entire thing. I'm going to show the execution first, followed by a in-depth breakdown. Break it down how I went about finding my narrative, how I went about finding my drawn liquidity, and ultimately why I took longs rather than shorts. Reason being, I look at a lot of my comment section from this trade recording in particular. I see a few people talking about how they had taken shorts during this 30-minute Po3, and they were fading me and they ended up getting stopped because of it. And I just want to break it down. I want to break down why shorts were invalid. I want to break down how I go about finding my narrative, my drawn liquidity, so this same mistake does not happen to you guys again. So hope you guys enjoy. So hope you guys enjoyed that trade recording. Now I'm going to break down how I found my narrative for that trade, what ultimately led up to me taking longs. So before we get into anything else, before we get into drawn liquidity, before we get into how I figured out my entry in particular, we have to first break down the foundations of narrative. The start of that is going to be by identifying higher time frame market structure, the foundations of market structure. Are we making higher highs? Are we making lower highs? Are we bullish or are we bearish? We can see very obviously here that price is ultimately bullish. Put in a low, put in a higher high, lower high, higher high, lower high, and now again a higher high. Overall market structure is bullish. So what are we going to do? Look for longs. Great. Now we should first understand before anything else, because sure, higher highs, lower highs, foundations of market structure, sure, that gives us a basic foundation of whether or not we're bullish or bearish. However, we need to break this down more in depth, identify a more external general liquidity and what price is actually doing right now. And we can do that by identifying market maker models, as I've talked about in my previous videos, and this is what we're presented with right now. Now, obviously, we are a few weeks past this, but overall price is still within the same range. And we can see very obviously that we are within a daily time frame market maker buy model, with a very clear draw on liquidity being higher, being the original consolidation high, which is what we have pointed out here. So we understand that price is expanding away from our second stage distribution, drawing towards all-time high, which is the original consolidation high. This just gives us some more refinement, some more, this is how we further develop our narrative of price, not just looking at higher highs, lower highs. We actually break this down more in depth with this, and this is where we are. So now getting into more details, going into Monday, which is the day that I took that trade specifically. We'll go back in replay mode and go back to right here. So now we're looking at what is ultimately being led up to our trade. Well, we'll go down another time frame to the 1 hour. So 1 hour time frame, obviously 9:30 open is right here. In fact, we'll just go into 9:30 in itself and look at what we're presented with. So this is a blank chart again. Higher time frame, like we just showed, is bullish. Why are we bullish? Well, simple. We are delivering from bullish PD rays and expanding higher. To add on to that, and I'm gonna give you guys a very simple model here. Forget the 30-minute Po3, forget the 4 Po3. Whenever we're looking for continuation on a higher time frame, whenever we're drawing towards all-time highs, we're very, very focused on higher time frame PD ray, lower time frame cracking correlation. So as price mitigates this 4-hour fair value gap, this 4-hour BISI, we can see that we form SMT with the London low at market open. As we can see right here, fast forward a few minutes, 9:30 opens up, and look what YM does. A lot of people I saw yesterday were complaining about how YM was, messing the entire market up. No, that's not what YM is doing here. YM is not messing the market up, because the only people who are saying that were the people who are taking shorts. No, you have to realize that YM is doing this very, very specifically. You can say algorithmically, to entice sellers. This enticement for sellers is ultimately what is going to lead price to end up going higher. This is simply manipulation, and as Po3 traders, our complete focus is on trading the distribution, not the manipulation, the distribution. So going into this day specifically, we have to look at what can validate higher prices. Well, we are already delivering out of a higher time frame PD ray. What do we now need to see to support longs? Simple. Some sort of cracking correlation, some sort of SMT. And YM does this for us. YM strongly manipulates down. What do? We run out the Asian low as well as the London low. And as we can see, we form SMT there. So YM runs out the Asian low, the lower day, whatever you want to say, while ES and while NQ fail to do so. This thing gives us our bullish cracking correlation to then validate a long position. So we'll break it down into a very simple checklist. Checklist 1: higher time frame market structure, bullish or bearish. Well, we're bullish, so great. Now what do we need to see? Delivery out of a higher time frame PD ray, and 3, some sort of cracking correlation. So higher time frame market structure, like we already identified, is extremely bullish. Are we delivering out of a higher time frame PD ray? Yes, a 4-hour fair value gap that we traded into overnight. Now, directly leading up to market open, we then form a cracking correlation, an SMT with the Asian low, the lower day, and this can then validate longs. Now, there is a proper time frame alignment for this, and a lot of people think that once we have formed an SMT with a low like this, that we need to then wait for a 5-minute, 15-minute buy model. However, you are simply going to miss out on the move. To put it very simple, there are times where that is needed, such as, down here at low day, when price initially manipulated into this 4-hour BISI. At this point right here, because recent 15-minute structure was already bearish, because of this, yes, you do need to wait for some sort of 15-minute buy model to then enter longs. However, when we go back to market open like we were just showing, we can identify the fact that, okay, higher time for market structure on the 15-minute is already bullish. So at this point, there's no reason to wait for a 15-minute buy model to form. If that is what you were potentially looking for on this day, there's no reason to. Reason being, 15-minute market structure is already bullish. Now, additional confluence is the fact that NQ drops down into the discount of the range, runs out internal structure, sell stops, which again supports longs on NQ, and ultimately what is going to lead up to us taking longs. So biggest thing to keep in mind here is that at this point, when price forms SMT with Asian low, you do not need to wait for a 15-minute buy model. Why? Because 15-minute structure is already bullish. So at this point, we can immediately drop down to a 1-minute time frame and then look for a long position. And as you guys know, once SMT forms, higher time for market structure is already bullish, we can then look on a lower time frame, such as a 1-minute. So on the 1-minute chart, what do we see here? So in terms of pattern, as we know, Po3 and AMD are different. AMD is a pattern based off simply price. Po3 is a time-based pattern. Here is just regular AMD pattern, and this supports our overall long position. As we can see, between the end of 7 a.m. leading up to the end of 8 a.m. price, so from 7:40 to about 9:30, price accumulates. Market opens at 9:30, we immediately manipulate down, and this is what we can classify as a Judas. What confirms out of the end of the Judas? Price forms SMT with a low day. Price taps EQ, mitigates EQ the range. This then validates longs. 1-minute time frame. What do we see here? Well, price forms another crack and collation at the lows, as we can see right here. Let me zoom out a bit. There's a few different cracks and collations here, and I don't want to overcomplicate anything. Most simple that we can get is the fact that, okay, boom, NQ runs out this internal structure low. YM fails to do so. ES also fails to do so. So boom, we have our higher time frame SMT, lower time frame crack and collation. At this point, all we need to see now is a CISD, which again, I already have a video on. So if you haven't already watched that, I highly suggest watching that. So in the trade recording, you may or may not see that I was trying to enter immediately off the CISD. And truth is, I was trying to. For some reason, I don't really know why. When I clicked my button, it just did not fill me. No clue why, but it did not fill me. And, in the moment, I was trying to get filled off the CISD, different value gap. That limit order was not what I was trying to do. I was trying to, market order the CISD right there. So nonetheless, I pretty much just got the exact same fill. But anyways, this is what the overall position was going to look like. My stop loss was this swing low right there, TP being the most clear, obvious level of external liquidity, being the previous day high. Again, we always use time. So entry was there off the 1-minute CISD, had to get filled off of a value gap. Nonetheless, valid position either way. So filled there, and then literally just let it play out from there. Initially, I moved my stop loss break even at this internal structure high, and I actually broke my rules by doing this, and I paid the price for it. I did not show in the video, in the recording, but when price retraced here, so my initial plan, in this trade was to break even at the accumulation high, because as we know, once the, in the classic AMD pattern, accumulation, manipulation, distribution, during the distribution phase, whether or not price is going to continue past the accumulation high is going to depend on how we react off of it. It's either going to be an immediate turtle soup of the high, or we're going to displace past it, use those buy stops that we're rating as new buy orders to then send price higher. I broke my rules by going break even too early. And again, like I said, I got a little bit of a late fill on my PA accounts. My live account, ended up not getting break evens on this retracement here because I was, focused on it. This account, I've got filled there right away. PA accounts got filled a little later, like right here, got break even by a tick. But anyways, what I'm trying to say is my initial game plan for break even was this high right here. And had I done that, my PA accounts number would have got break evens, and it would have ended up being a huge day for me personally, and would have hit full TP on those PA accounts. Nonetheless, it still ran on my live account, so I'm not disappointed in it. It's what it is, but nonetheless, I have to stick to my rules, and that was just how I went about it. So simple. We'll recap once more. Higher time bullish, higher time frame order flow, higher time frame extremely bullish, clear external draw on liquidity higher being the all-time high. Lower time frame relative to the higher time frame market maker buy model, we deliver out of a 4-hour P3. Going into market open, we have our classic lower time frame AMD, as you can see right here, accumulation, manipulation, distribution. During the manipulation phase, YM runs out low day, and Q taps EQ the range. That then validates us to drop down to a 1 minute time frame and look for longs. So no reason to overcomplicate anything. Honestly, it was a super obvious setup, and I don't want to speak arrogantly because obviously I know some people did short that, but when you are actually looking for the right, when you actually are properly identifying higher time frame market structure and higher time frame native, it gets super obvious. Like literally, it's so simple. Don't overcomplicate anything. Going into each day, the most simple stuff you have to do is just identify whether or not we're bullish or bearish. If we're bullish, all you should be focused on is longs. If you're trying to take shorts in a bullish market, you're just putting yourself in low probability conditions. Whereas if we're in a bearish market, sure, then looking for shorts can be valid. But you have to first identify what type of market we're in. Are we in a bullish market or are we in a bearish market? If you're in a bullish market, your focus, your priority should be longs. You should wait for some sort of bullish SMT to form, some sort of delivery out of a higher time frame P3 to form. Like we talked about, the order. Bullish market structure, check. Higher time frame P3, check. Lower time frame crack and collation, check. When you have all those confirmations, then you can get a lower time frame entry. And that's all it is. It's just a simple 3-point checklist. Higher time frame market structure, higher time frame P3, lower time frame SMT. That's all it is. And of course, you have to have a clear draw liquidity higher today, or yesterday, I guess. We had a clear draw liquidity higher being the pre-say high. And that was what my TP was. Otherwise, aside from that, that's everything I wanted to cover. Again, super simple. Over the last few weeks, I've taken a ton of trades. Honestly, I broke my, for additional reference, I broke my losing streak, as you guys know, or at least those who stay up to date with my videos. In May, I had one of my worst losing streaks in a while. In fact, like a mix of poor price action as well as a mix of bad emotions. I overall was just not trading the same and was just having, loss after loss, ended up producing my sizing. But ever since June started, I've just had, win after win after win. And, those who stay up to date with my social media, such as, my ex, you'll see that, you'll see all the trades I'm taking. And, we'll show since the start of June. So, as you can see right here, 1 win, break even right after that. Day after that, another win, as you can see right here. And then, again, the day after that, another win. Then the same day I took another win, just posted the day after. And now this trade that we're covering today, another win. It's just been win after win, and obviously I don't want to get arrogant because of that. I still have to remain disciplined. I still have to follow my rules, follow my plan. And overall, I'm not going to be changing anything. But nonetheless, all my trades I'm taking, at least most of them, are all based off the 30-minute Po3. I thought yesterday's was way too obvious, way too clean to not break down. So that's why we're here today. Otherwise, if you guys have any questions, comments about the trade I took, if you guys want me to break down any other trades, just let me know in the comments below. Otherwise, I'll see you guys all in the next video.